All right, welcome everybody back to the Exploring the Blockchain podcast, where we document our experiences of learning about the blockchain, interview guests and experts in the space, and keep you updated on the latest trends in the industry. I am your co-host Zane.
And I'm Josh. Today we're joined by Dr. Vincenzo Quadrini, who's going to discuss his thoughts on macroeconomics, decentralized finance, and his thoughts on the broader blockchain industry. Thank you so much for joining us today. Can you start by telling us a little bit about your background and what got you interested in the decentralized finance space?
Sure. I'm a professor in the Department of Finance and Business Economics, the Marshall School of Business, and my interests are in macroeconomics and also in international finance. And teaching macroeconomics, of course, one important topic is money. Is the role of money, the role of monetary policy, and so on. And an important element of decentralized finance is the new development of cryptocurrency, which is a form of money, is a form of financial assets that can be used for a transaction. So that got me interested in understanding a little bit more what were the implications of this new form of money, cryptocurrency. But cryptocurrency is just one element of decentralized finance. So I wanted to understand a little bit better what were the implications for the finance markets due to the new technology. Essentially, one way to think about cryptocurrency, blockchain, and so on is the use of new technology to perform tasks that were typically conducted in traditional finance. And this is a little bit how I got interested in that.
Cool. So maybe I guess my first question to you would be, where do you see the drawbacks of the traditional finance system, and where do you think, we have an opportunity with DeFi to be able to solve these problems? Do you see any major things where you're like, yes, this is where decentralization is necessary, or this is a drawback in the traditional finance system that would be helpful if we incorporate this new technology?
Sure. One important characteristic of traditional finance is that it's dominated by large companies, large banks, large financial intermediaries. What that means is that typically they tend to have a significant market power. Market power means that they can affect the market, and typically implies big profit margin. Now, the decentralized finance is a new form of finance in which the role of big banks and big firms is limited, which basically, principally, this could reduce the margin that financial corporation could extract from the market power. That is one element in which decentralized finance could be important and relevant. Obviously, also there are many other benefits, of course, of decentralized finance. This is not the only one. But if I think about what are the shortcomings of traditional finance and what is the most immediate problem that decentralized finance can solve, one thing that I immediately refer to is the role of concentration in the traditional finance and the market power of the major players. Another important benefits of, in general, usage of technology in finance is that technology makes accessibility broader. So I'll give you an example. Think about portfolio management. Portfolio management, of course, will be of interest for a financial company if the investor has a significant amount of wealth to invest. Okay, with a small amount of wealth, of course, portfolio managers are not so interested in managing those portfolio because, of course, there is a limit how much money they can charge as a commission. But with the new technology and the accessibility made possible by technology, even small investor in principle could access a certain type of financial services that instead of being provided personally by a financial advisor can be provided by standardized advising through technology. Although I have to also point out that this example is not necessarily associated with decentralized finance and the use of blockchain. It could be also the new development more generally in fintech.
Great. I just wanted to mention something. I went abroad to Rome this summer with Marshall on a link program, and it was great seeing. We went to a metaverse company, and that was interesting to see. This really is a global thing, and people around the world are working on this new technology. My question to you is, what are the drawbacks of decentralized finance? I know a lot of people still believe it's a scam. There's a lot of less security right now. It's still in the early stages. What are the drawbacks?
Yes, trust from the part of the public is fundamental. And I think that one of the limitations for the expansion and for becoming mainstream in the financial industry, it is very important to earn the trust of the users. Okay, and because of the complexity, sometimes it's really hard for regular people to fully understand that they are using and they are part of a system that is truly trustworthy and secure. And the security certainly is an important consideration. And but one aspect that I personally learn is that once you really understand how the system works, you realize that actually is quite secure. Now, this doesn't mean that it's possible to avoid any type of scam or this kind of activity. Of course, that will always be there because as the technology becomes more sophisticated, even those who are taking advantage of will become more and more sophisticated. So it's a sort of a race, and at the end, it will. I don't think that is possible to really come to a system that is fully secure and isolated from any type of scam activities. However, I think that the design of the system is quite secure. I believe, but even though it's very secure, there is always the skepticism. There will be always the skepticism from potential operators, potential customers, and in part because it's hard to understand the technology. Not in terms of impossible to understand. It's just that it requires some investment in trying to learn how the system works.
You made a really interesting point there, which was, the people who are really optimistic and the builders, they're going to get better, but the scammers are also going to get better. And
that's right. It's always a race, right?
Yeah.
This is typical in regulations. The government introduces regulations to try to avoid certain type of problems, issues. But then the market always finds a way to avoid this type of regulations, which requires the government to introduce new regulations. So there is always this kind of race.
I want to ask you a little bit about, I enjoy having the use case discussion with people, which is, where do we see this, in the next, we can use a long-term horizon. Where do we see this going? Is this something that's going to replace the dollar? Or maybe this is just going to be an alternative asset class that people hold? In the case of some dark horse event when, something crazy happens to the government, we see crazy inflation, people will use their crypto holdings and that'll help them. Where do you see the future of decentralized finance?
Yeah, it's very difficult, of course, to say what is going to happen in the near future. but I can give you my my thoughts. I believe that cryptocurrency, and more generally decentralized finance, is here to stay. And in particular, I'm not sure cryptocurrency, but I think that decentralized finance is going to expand more. But if we want to really talk about cryptocurrency, and if we are thinking about the possibility that cryptocurrency will replace traditional currency, and when I say traditional currency, I'm saying currencies issued by national governments, okay? I'm a little bit skeptical that it can really replace government money. Now, when we think about government money, of course, also the government money at some point will become digital. Okay, so definitely the paper money will be destined to disappear, I think. But the fact that the new type of money will be digital, this doesn't mean that has to be cryptocurrency. Okay, so the difference is that a digital currency issued by a government is controlled by the government, and all the transactions basically are validated by some organization that is under the control of the government. This also means that the government, of course, can observe all transactions that takes place. Cryptocurrencies instead are based on a system that is fully decentralized. Nobody owns the system. Nobody controls the system. So in principle, all transactions are anonymous and cannot be traced over time, which many believe is a very attractive feature, because the fact that transactions, for instance, if I make payment to you or to others, others cannot really observe that is a very attractive feature. But it's also true that the government has an interest in tracing payments. For what reason? To avoid tax evasion, to fight illegal activity, and so on. So my guess is that to some extent governments have an interest to keep the government money, and so it won't allow to completely replace government money with cryptocurrency, at least if we are talking about advanced countries, advanced economies. Okay. Now, if we are talking about countries that are still in the developing stage, where there is a lot of monetary instability, then cryptocurrency could be very popular, could become very popular. And we are seeing that trend already.
And how long do you think we're going to see this? Do you think it's going to be in the next 10 years the US has a digital dollar? Or are we saying this is 20, 30 years out?
I think that relatively soon, in my sense that will be shorter than 10 years. I think is evolving in this direction. By the way, from a practical point of view, the fact that we use paper money or digital currency, but issued and controlled by the government, doesn't really make much of the difference. Doesn't make. Essentially, already we are using tools that allow us to transfer funds electronically, right? Like Venmo. So using the digital currency will be like using Venmo. It won't be much different. Okay, so from a user point of view, there is no a difference. I think that it will depend more on the literacy of the population. Literacy, what I mean, population that is fully capable of using electronic means to make payments, right? So still, there are, of course, part of the population that don't feel comfortable to do that, right? Perhaps they are a little bit elderly, right? More older people. Perhaps they don't feel like making payments to the phone through any other electronic means. So this is why I think that it will take a while for the population to adjust, to become comfortable with that. But as the more and more people become comfortable, and of course the younger population is already very comfortable to doing that, I think that there will be the full replacement of paper money.
Yeah, I think what you said is important, which is, when I want to wire money, a lot of people who are very into the crypto space say, what's great about this is it's instant, which is true. But what wiring money does is, there's fraud checks. They make sure that you're not sending money to some terrorist organization. Like stuff like that is in place, which we don't necessarily get with crypto. And so I think there's some sort of happy medium. And I want to get your thoughts on what you think crypto regulation and DeFi regulation should look like. You think it's a must? Do you think regulation is very important? Do you think that that's against the thesis of what blockchain is? What do you think about regulation in this space?
Yes. So in general, the philosophy underlying cryptocurrency and decentralized finance is that we are designing a system that cannot be controlled by big operators, and sometimes those big operators are governments. Okay, but it's also true that sometimes when the markets are completely unregulated, some bad things can start to happen. So there could be, in some sense, the possibility of lack of consumer protection. For instance, many small investors they end up doing certain things in the system without fully understand what they are doing. And sometimes this means basically losing money for the benefit of whoever is more expert, more knowledgeable about the system. So sometimes, for instance, the role of the government is to make sure that the weaker operators don't get exploited by the system. So for that reason, I think that there should be some form of regulation. I'm not sure what type of problems might arise, but as the system develop, then it will become clear what type of problems are going to emerge. And when those problems becomes clear, then I think that there will be some form of regulation. For instance, let's think about contract enforcement. A big element of decentralized finance is what we call smart contracts. Smart contract is just a contract that instead of being written in words is written in computer codes that will be then executed based on the terms of the contract, right? If we have a regular contract and the contract doesn't get executed, then we can get to the court to enforce that, right? But what happens if one of those smart contracts, for some reason, okay, doesn't get executed? Okay, in principle, it shouldn't happen. Okay, so I'm just making the case hypothetically. But suppose that for some reason doesn't get executed. So who is going to ensure that the enforceability of that contract? So for that reason, I always think that some types of regulations, some norms must be introduced in the system.
I think one of the big problems with regulation is a lot of Congress, a lot of the Senate tend to not know too much about crypto and blockchain. What is all these words that they kept on hearing? You're a professor and you're teaching one of these new blockchain classes in the business school. And I was wondering what you think is the best way to teach and learn about blockchain.
Okay, this is a very important question. I developed this course just this year, so I'm going to teach for the first time in fall. And so I'm still trying to figure what is the best way to teach it. But I think that even though being in the Marshall School, in the business school, my focus will be mostly in understanding the implication for the functioning of financial markets. I also think that it's important to understand the technology underlying that. Okay, so in my view, the best way to teach is to combine at the same time the teaching of the technological aspects of the decentralized finance, how it works. So in other words, it's important to understand how the blockchain works. And once we understand how the technology functions, that facilitates our understanding of the implication for the work in the financial markets. But I have to admit that I'm still trying to understand myself what is the best way to teach it.
So maybe for a little bit of context, do you mind just telling us a little bit about the class and what you're teaching?
Yes, so an introduction to blockchain. I will not spend too much time because, of course, at the USC there are courses just focusing on blockchain. But I expect that some of the students they are not exposed to the blockchain. They didn't take the blockchain course, so they might not be so familiar. So it's important that I also provide some introduction to them. Okay, that is the first part of the course. Then the second part is really introduce the various form of decentralized finance, which might include not only cryptocurrency. Cryptocurrency is just an aspect of it, but it includes, for instance, decentralized lending, other type of financial contract that can be performed, can be executed through the blockchain system. Okay, essentially through smart contracts. But I will also would like to give students some perspective about the future. So, in other words, I will certainly pose the question of whether those new type of asset like digital asset or non-fungible tokens are purely speculative assets, or there is really a fundamental value of having digital assets, for instance. And I will propose that there is actually a fundamental value and could also affect the way certain market will work. Certainly, when we think, for instance, the market for arts, for instance, the new digital revolution will certainly change the way those markets work. Another example is music. We know that while music in the past was essentially controlled by very large company corporations. If you wanted to succeed as a musician, essentially you needed a big record company that agreed to record your music, so that it will be diffused, will be sold. You can imagine that very few artists were really able to sign contracts with important label companies. Okay, but today, in principle, you can write your own music and then you can sell digitally on the market without really the need of a big corporation behind you. So that could open quite a lot of doors and could facilitate a little bit more competition in the market. I think that there is a lot of value, fundamental value, but I also agree that when a new market gets introduced, there is a lot of speculation. So as you said before, you mentioned, a lot of people say, okay, I don't know what is going to happen with the cryptocurrency. I just put a little bit of money there, and then if it doesn't work, okay, I'm going to lose a little bit. It's not a big deal, but
it's a hedge, if anything.
Exactly.
Yeah.
Exactly.
I think we also see there's been a lot of speculation in the NFT space, and even a lot of these other cryptocurrencies, other than even like main ones like Bitcoin and Ethereum. Yeah, there's more use cases than many others that have no reason for existence, but we see more use cases as the days progress. I wanted to get your thoughts on the broader crypto market, what's going on right now. How do we see the parallels of what's going on right now to past financial, not depressions, but
crashes, let's say crashes. Right. Of course, we know that cryptocurrencies are very volatile. Okay, we see big increase in prices and big drops. But I think that what is happening now, where the value of cryptocurrency is declining quite a bit, is also linked to the broader financial markets, right? Because also the stock market actually in the last couple months has been underperforming, like a lot of stocks lost value. So I think in this way that in general now there is a little bit of retreat from investing in financial markets. Okay, now because the cryptocurrencies tend to be very volatile, this means that when the financial markets tend to go down, cryptocurrency will go down even more. Okay, and then perhaps if there is the recovery of the broader financial market, perhaps cryptocurrency will also recover, and will recover perhaps more of the let's say the general stock market. I don't know if this is the case, but you can see a little bit some connection between the two. So all I would like to say is that because during the last couple of months cryptocurrency didn't do very well, this doesn't mean that they are going to disappear. But I would also say that during the boom, when of course the prices were going growing very rapidly, when bitcoins were exchanged at above $60,000, for instance. Okay, this was not necessarily a sign that of success. Okay, because again there is a lot of volatility in those markets.
In past crash, I mean, let's take the 2008 crisis. I think that one's interesting because you have the government coming in and doing the bailout. Here, what we've seen with these crypto companies is no one's coming to help them, right?
No,
I mean,
there is no
the nature of the blockchain ecosystem is that it's, if you put in money, it's you're owning putting in that money, and if everything goes to zero, then you just have to deal with that. Do you have any thoughts on liquidity in the crypto markets and how to ensure that during these types of crises, like liquidity is there? I'm not sure if government stepping in is the right solution.
Sure. Obviously, the situation was very different compared to the 2008. The problem in 2008 was that if some important institutions were going to fail, there will be a chain reaction throughout the whole system, and that would have created a huge drop in the damage for the whole economy. Now, for the cryptocurrency, of course, they are not so diffuse and so used in transaction, at least for now, that the drop in value can create the same type of chain reaction. So definitely there is no really need for the government to intervene and generate a bailout. Now, if we are going to evolve in a situation in which cryptocurrency are the main source of liquidity, then it's a different story. Okay, but we are not at that in that situation. And personally, I don't think that we are going in that situation for the reason that I mentioned before. I think that we are certainly evolving through digital currencies, but I still believe that government digital currency will be the dominant ones also in the future.
I think we'll wrap it up here. Thank you so much to Dr. Vincenzo Quadrini here for speaking with us today. Provided great insight. And thank you all for listening.
Thank you for inviting me. Thank you.